How to spot an Indian in the wilderness? They have a water bottle. Hey guys, what's up and welcome back to this YouTube channel. It's Igor and Nito here, guys.
Well, I didn't know that only Indians drink water.
But they always carry water bottles. But anyways,
We
guys.
are thoughtful.
Exactly. That's why she's into mortgages and I'm into real estate. And I dragged the mortgage broker, guys, today, and she to ask her a question, because a lot of people are coming right now because of 30-year amortization. Everyone wants a 30-year amortization, guys. It's for
We
some.
are just like the Americans now.
This is awesome, guys. And it's also, from what I learned from the history, it used to be there in Canadian history before, and then they
It used to be 40-year amortization.
yeah, now it's
With
like
even zero down zero down. Can you imagine like what the life would have been then?
well, that's why baby boomers have all the houses and we're still struggling to buy anything, guys.
And then baby boomers are asking us, no, you need to work harder just like we did.
Exactly. They would get 0% down, a cashback mortgage, and you know, and
Stop sitting around on your ass and making videos.
Exactly. Everyone wants to be an influencer these days, guys. So let's get into the reality. And I want to ask Nito, because a lot of people are shopping for houses right now, and everyone wants to take advantage of the 30-year amortization. And what they're talking about is something that Chrystia Freeland and Justin Trudeau announced, and it's going to take an effect. So everyone is like hyped up about it. Even Toronto real estate market started picking up because of that. Because I'll tell you what's going on with me. People are coming, they're like, Igor, let's buy something now. I know next year is going to be crazy. Because of these people, I canceled my vacation with Nita. I was going to go to Dominican or something. She wanted to go on a cruise. But anyways, guys, and by the way, quick disclosure, she's used the DLC Clear Trust Mortgages and I'm with XP Realty. Guys, anyways, so you're making me laugh and I forget about what we were going to talk about. And anyways, amortization. So people want to get an offer accepted before real estate becomes more expensive, before some people forecast bidding wars in Toronto especially starting next year. So some smart buyers are, even in Calgary right now, they're like, I'll look in the market going down, and then when it comes into effect, I'll take an advantage of this entire 30-year amortization. And so I want to ask a mortgage broker, a professional mortgage broker, the best one in my family at least. So yes, guys, I want to say that why is it so important? What kind of impact does it have on the purchasing power of first-time home buyers? Or like, would it impact their monthly payments? Would they be able to buy more? Like, what does it, why does the federal government so persistent about this 30-year amortization? What's so cool about it?
What's so cool about it is that it makes housing more affordable. Well, that's the slogan, at least. They're trying to make first-time home buyers have access to more and more budget to buy the kind of homes that they want to, at least in Ontario and in BC. Especially the 30-year amortization is something targeted only to Ontario and BC, because you know detached homes are at least worth $1 million or above. So with that being said, 30-year amortization, why it's so important is that with your income with 25 years, you are limited. Your budget is limited, but if it's extended to 30, then you can stretch it a little bit more, right? All the rules still remain the same. Yes, the rules for down payments changed. That is also coming into effect for December 15th. So 5% up to $500,000 and 10% up to $1.5 million. That was $1 million before. They have extended to 1.5. Initially, how it was is that after 1 million, you have to pay 20%. Now that people don't have money, nobody can afford those homes, they have extended less than 20% up to 1.5 million. So I guess you understand the picture of what's happening right now. So that's the answer to your question, like why is 30-year amortization being talked about so much? Because it increases your budget.
So basically, what I understand is mortgage brokers calculate your budget based on your monthly payments, and housing being more affordable, meaning you pay a little bit less on monthly payments, and therefore you can afford more. Or am I getting something wrong?
Yeah, I didn't understand your question.
So monthly payments, why do the car salespeople tell you to go for 80-month amortization rather than 60-month amortization?
So
you can afford more.
Your payments is smaller.
Okay.
Right? You are dividing it, let's say for a 10-year period, I'm just giving an example, 10-year period, and then stretching it to 30 years. So
yeah.
what a 10-year period look like would be $1,000 to a 30-year period would look like divide by 10.
So would it increase my buying budget?
Yes.
So basically,
And it would give you a better monthly payment.
okay, so basically what she's trying to say is that the banks are going to rip you off for another 5 years. You're going to pay a ton of more interest, but your monthly payments are going to be less.
Yes.
So
The
because
banks are going to rip you off in the sense that your insurance premium, your mortgage insurance premium, previously it used to be 4% for 25 years. Now it's going to be a little bit over than 4%. So that's going to be included on your mortgage as well. That's going to affect little bit as compared to 25 years, but because you're stretching from 25 to 30, it's going to be, let's say, $200 lesser than what you used to pay.
okay, so basically it increases the budget, but the premium, insurance premiums would go up as well, yeah?
Yes.
So still, it sounds like it's not going to be a very significant savings, but in terms of monthly payments, guys, but as you can see, like big banks are going to be making the money, and insurance companies, as always, are going to be making the money from us, normal people, guys. Okay, but a lot of people are hyping up about it right now and jumping on it. So are they expecting that because of the purchasing power of the first-time home buyers going up, are they expecting to hit up the real estate market, and that's why they're calling me?
Well, yes and no. That, along with a lot of other rules that may or may not come into effect, because, as you know, election year. So that's going to happen, and people are still sitting on the wall and thinking maybe it's not really a good idea to just sit on the wall and ask for more benefits or more rebates or cashbacks, as to say, rather than just jump in right now when it's affordable. During typically in the winter times, the houses are lesser, right?
Yeah.
Are cheaper and are priced lesser as compared to that in the fall or the spring market or even in the summer. So people just want to jump in right now, and most people, what they're doing is that they are waiving off their conditions right now, but they're closing, let's say, until next year March.
That's what I guys noticed. A lot of people are
so they are getting best of both the worlds. They can not only choose, if they choose to go for 30 years, they can go for 30 years, or they want to have a lesser interest by then, because hopefully Bank of Canada is going to lower down the interest rate by then.
But guys, I want to tell you something interesting that I found out about this, why I dragged in a mortgage broker to this. So basically people are like, Igor, let's buy a house and lock this in so that, like, for example, well, I purchased a home for somebody and we are closing closer, like the keys, their possession is in mid of January. And a situation with this kind of thing is, I want to guys explain, is that people want to take advantage of this 30-year amortization and everything. Luckily, for those guys, we purchased them a brand new property. So for the brand new property, guys, it's set in stone. They already have a 30-year amortization in place. But some people are saying, well, for the first-time home buyers, not only for the new properties, there will be a 30-year amortization starting December 15, you're saying, right?
Yes.
Okay, December 15th. But here's the plot twist, guys. And I didn't know that, and nobody knows that, but banks know that. And the plot twist is, I'm going to break your mind right now, guys. Are you ready for this? The 30-year amortization for first-time home buyers does not exist yet. It does not exist. And that's what she said. I'm not even joking right now what she said. I'm saying
for existing homes.
For
newly
existing
built homes, yes.
But people would come and they would say, what the hell are you saying? Justin Trudeau, Chrystia Freeland, government came out, they said December 15th, give me my 30-year amortization period. No need to, okay, so guys, hear me out. The funny part is that the banks know about it. Everybody knows about it. Everyone is prepared for 30-year amortization. But technically, it's not there yet. So we need to, let's get up the hill so we can catch a breath. And you explain to me, what do the lenders tell you as a mortgage broker about this 30-year amortization? Why do they say it does not exist, and how do they deal with it? What's their view on it? Like, why can't they just not give you a pre-approval for 30-year amortization so that my clients who are thinking about it, who are working with me, they can have a peace of mind. Your clients coming in from different provinces as well, like I know you're licensed in Ontario as well. they have a peace of mind, or that just explain to people so that they, in this video, they know exactly what to expect from the bank and how much time do they need before, to make sure to be on the more of a safer side, and explain just explain what the banks told you basically.
Well, the banks told me this. There has been nothing set up yet for this change that's going to happen. This is going to happen, yes, for sure. But as of right now, you need to calculate upfront. And should you have a closing, you need to have a closing somewhere closer to end of December. That's closer to, let's say, December 29th or 30th, depending on how backlogged the insurers are. So basically how you get a mortgage approval is, first the banks are going to review your application, submit it to the insurer, get their approval, and then the banks are going to review all the documents, everything, give their approval as well. This is in case of less than 20% down payment. That's what I'm talking about.
Yeah.
That's when you need a mortgage insurance. So that's how the regular process is. So now, when this rule kicks into effect, you basically, whoever had a 25-year approval, they have to switch to 30-year approval. They again have to go through the same process.
Yeah.
They have to send it to the insurer, get an approval, and then get back.
Yeah.
Sign a different commitment letter, because now the amortization has changed. Your payment has changed. You have to sign before it gets to the lawyer, right? There is this process that's going to happen.
Yeah.
But because this change that's going to kick into effect, all the 3 insurance providers are going to be swamped. So typically, an approval might take 2 to 3 business days, let's say, just an example. Right now, because of this new rule, it's going to be anywhere from 1 week to 2 weeks.
It's basically when you're in logistics, guys, on a Boxing Day, I feel is going to be a situation. When you were working in your UPS at some point, and I was working in a logistics company, and then the deliveries kick in, and after holidays and everything, and you're swamped, and you're like, you know what, you're not getting your delivery. There is no way we are going to get it all done within this time frame.
Hopefully the insurers guys are not going to go on strike like Canada Post.
Oh, then we are. It's going to be, guys. It's going to be a big legal procedure. But hear me out. There is one more thing that I found out, which is a very serious thing. It's called the Office of Superintendent something. It's like OSFI, they call it. It's a bank regulator. And here is the insider information that I heard, guys, is that OSFI hasn't yet instructed the banks on how to deal with 30-year amortization yet, right? So basically, from what my boss here told me, is that the lenders themselves, the banks, do not know exactly how the entire process is going to work, because Office of the Bank Regulator has not provided them with instructions on how to deal with it, and therefore those banks haven't even developed their policies yet on how to do that. So they're saying this like it's a great thing that Justin Trudeau and Chrystia Freeland told you that thing will be here, but for now it's like pixie dust. It really does not even exist in their portfolio. The only way they know about it is from the news that you, me, her, us watched on the Canadian news channel, watching the news. So in reality, and it was shocking information to know, not the mortgage brokers, not the real estate agents, not even the banks themselves. I hope Justin Trudeau knows how to do that. Nobody knows exactly how it's going to roll out. And here's my weirdest, guys, the biggest fear about Canada, and I know the bureaucracy and everything and how slow it is and everything. I was like, what if Office of Superintendent is going to delay their policies by another 2 weeks?
What if they go on strike?
Guys, I don't know, but I'm just saying that what I want to say from my point is, it doesn't matter which mortgage broker you're working with. Of course, you should be working with me only. As Realty is a realtor, and Need2 is DLC Clear Trust Mortgages. Then, because guys, you should work with us, of course. But it doesn't matter who you work with, guys. You're doing your own research, and therefore you're smart, guys. Make sure when you're negotiating on a contract, and that's not the mortgage broker, it's your realtor's job, your agent that you hired's job on your behalf, but you have that information now. Guys, 2 weeks more, try to get, my recommendation would be, and I think Need2 is too, You need to, would a month be better than a 2 weeks?
Well,
Like, what
that's
would
to
be
be
the
on the
better?
safer side. I mean, with a month, at least you can, if in case there's any going to be cuts going to happen, you can get the advantage of that with a month, and also be safe to know that, okay, you will be in time, on time for the change to happen. So yes, a month, January 15th would be best, because December 15th is when the change is going to come. I would say if it's not possible, at least stretch to the end of December, January 29th or 30th, or first week of January. Simple.
First-time home buyers, here is a free advice for you for thousands of dollars of real estate experience I'm giving away for you right now for free. Don't be penny counting people in terms of inspection and pissing off the sellers right now. Try to negotiate a later closing if you want to take advantage of it, and don't screw up your relationships with the seller, because in case, from what I understand now, and from a mortgage broker, OSFI and Canadian government screws up and the banks are backlogged and you need an extension for your closing. You want to be on a good relationship with the sellers as well in order for you to get the 30-year amortization. Because I want to tell you from experience, if you piss off the seller, guys, I know some sellers and it's your realtor's job to explain to you how it works, but if you piss off the sellers too much and negotiate every penny and you make only you're the only one who is winning out of the entire situation, they might not be willing to give you, at least not for free, the extension on closing if there is any delays for your 30-year amortization, and therefore you'll get the keys and get your 25-year amortization and you'll be stuck with it because, well, I don't know. Okay, let's ask the mortgage broker quickly. Okay, Nito, let's say there's this situation I just explained to you. We got a 5-year fixed mortgage, 25-year amortization, and I was just a penny counting guy, and I really pissed off the seller. I literally made him sell his shoelace and everything in order for me to get what I want, and they didn't give me the extension that I needed, an extra day, and 1 day late, and it's going to happen to a lot of people right now, what I'm saying. We didn't have enough time to revise the commitment letter, so I got it funded at 25-year amortization. And can I now, when renewal comes, can I do it? Can I just, is there any way to extend my amortization? Because I really wanted 30 years.
So renewal is at the end of your mortgage.
Well,
So renewal means it's a completely different thing.
Okay.
Renewal is let's say you signed a mortgage for 1 year, 2 years, 5 years. You have to wait at the end of the 5 years to see if you can possibly extend.
Okay.
So that's not what we are talking right now. We are talking about just the purchase side, right?
Yeah.
So
I screwed up. I signed up for 25 years, but now it's 30 years.
yes.
And I feel like, I got cheated. I want to,
Yes.
What do I do? Can I do it 30 again?
First thing is that you have to request your realtor to extend your closing.
Okay, no, I'm just saying totally situation, I was so greedy and I just made sure that, they even paint the doorknobs for me on inspection, every penny, and the seller just screwed me up and they said, I'm not going to give you an extension. If you want, walk away from your deposit. And I was like, I'm not going to be doing that. So now I have a 25-year amortization. So is it gone? I cannot get as a first-time home buyer 30 years anymore?
Yes, once it's closing, once you've signed, there is no way that the seller is not going to give it.
shit.
It's done. It's gone. I mean, the only person who can give you an extension is your seller, right? They have to sign the amendment.
I mean, it's too late. I got the keys.
Yes, you got the keys, done, gone.
Okay.
There's no change. I mean, at the end of your contract, whether you've signed for 3 years, 2 years, 5 years, then you can ask for, or you can break your mortgage, pay the penalty, and then switch it to.
But would it be, if I break the mortgage, would I be still considered a first-time home buyer?
Yes. Well,
That's kind of a difficult situation, yeah?
Well, you're breaking the mortgage anyways. First time home buyer or not, you can stretch up to 30 years.
You can?
Yes.
Okay, whew, now you calm me down a little bit, Nitu, because...
But what about the penalty? Up to $3,000, up to $3,000, it's going to be counted inside your mortgage, penalties and fees, but anything over $3,000, you will have to pay up from your
So
pocket.
not only I would pay the penalty, and if I go with different lender, they would just put it on top of my mortgage, right? That penalties.
Yes.
Okay, so it makes sense, guys. So I guess, if you screwed up like that, it makes very little sense to break the mortgage, pay the penalties, and get 30-year
But there are
amortization.
people who really don't want the 30 years. Like I've been working with a couple of clients who have already bought a new build from a builder. They're
Yeah.
like, yeah, I know that there is an option, but I really don't want 30 years. I just want to stick with 25 years, rather pay the mortgage off sooner than extend it and, make this more complicated for everybody and make this more dreadful for more number of years.
But
So there are people who want 25 years as well.
I'll tell you my perspective on this, and it might be very subjective, but if, for example, I'm a first-time home buyer, right? I purchased a home. There is a lot of lenders that allow 20% prepayment option. So I can do a lump sum payment, 20% of my mortgage amount of principal in the end of the year, right? Or throughout the year. So technically, like, it does make sense for me to take less than 30-year amortization because, like, for example, if somebody of my family, like somebody lost a job, my payments would be less and it's fine. But if we are doing good and I want to pay off the mortgage sooner, I can either do 20% prepayment, or by the end of the entire period, I can just pay off the entire mortgage in cash and I don't have to do this payments. I'm just smart with my money like that. Let me handle my own money, not the bank for me. So that's kind of my logic for that. I still see a huge advantage in 30-year amortization in that way, guys. And by the way, speaking from that point, I actually have friends and clients who actually are on a we purchased properties for them less than 2 years ago and they're almost done paying it off. There are people like that who take advantage of this lump sum payments and double up their payments, and they actually pay off their mortgage really, really fast like that. So, like, I wouldn't want the bank just to charge me, 15 years amortization. It's like, if I was, let's say, if I was to go in the end of the year and give 20%, and then give another 20%, automatically my amortization goes down, right?
Yes.
So I can just go back and it was 30. I look at my bank statements, like on the login on lender's profile, I look at there and it's like, oh, it's already 18 years, not 30 anymore. So, like, it doesn't really make sense. But then if I don't have enough money, my payments are less.
Yes, and you can only take out 80% of your property value if you want to take out equity from your home.
Oh, guys, you'll make a separate video for that. There is actually a great news coming out, and they are actually making it easier very soon. And we'll cover it in the next video, guys, because we can talk mortgages and real estate until, guys, tomorrow, because that's what we do every day. I'll tell you guys what mortgage brokers do for fun, and it's not fun. So they are sitting on meeting calls every day with different banks and lenders, and they learn their policies. Guys, so literally they're sitting there and learning how it works. And guys, why they do that? They do it in such a way so that they know exactly how to get you a mortgage from a specific lender. It can be TD Bank, it can be Scotia, it can be whatever the lenders are. And they literally learn their policies to make sure that when you explain your situation to them, that they would know how your situation works and how it works best for which specific lender in a depth that bank employees themselves in a branch a lot of times don't even know themselves. That's what I want to give some credit to mortgage brokers, just in case you know what the hell they're doing, sitting at home like that on meetings all the time and not answering their favorite realtors' phone calls, who are like me calling her and saying, hey guys, is it ready? Is it ready? Is it ready? Is it ready? Meaning the financing, is it approved? And they're like, just leave me alone, right?
Yes.
It's the banker who is doing that. That's what they do for fun, guys. And for fun, I just drink coffee with you guys and help you spend your money. Anyways, thank you for watching. It's neat to ask your questions, please. Ask your questions, because I know there's so many questions for mortgages. It's the most stressful part of buying a house. I know from experience, guys, inspection is nothing compared to this. Condominium document review is nothing compared to financing. Financing is the strangest, anomaly in Canadian economy. I'll tell you an example. Let's bring not an Indian guy. I'm going to make fun of my own people. Ukrainian guy. Ukrainian guys come in, and he says, Igor, I'm buying a house. I'm saying, okay, good. And they're like, I have $400,000 cash, so I'm good. What, 400 is too much. Let's say $100,000. But anyways, what I'm trying to say is people come with a lot of money from other countries, and they think that it's automatically they get an approval because they have more money than an average person even in Canada. And then the mortgage broker comes up and they're like, no, you're not getting the approval. And that could be very disappointing, because it's such a complicated thing, and how it works. Where, you know, from back home, I know there are some people in India and in Ukraine too, if you have the cash, you're the king. In Canada, it's like
Credit is the king.
credit is the king, yeah. I think job offer is the king, credit is the king, no debt is the king. And
Well, that's why it's important to get your pre-approval, know where exactly you stand, and don't go over your budget, because you might be losing your deposit if you waive up all the conditions before, right?
yes, yes. And also, guys, I'll tell you another tendency, a quick summary. I'll tell you guys, the people who are, from my experience, the people who are making the most money in Canada, the very wealthy upper middle class Canadians, they buy cheaper homes. And people who are making less money, they always want to buy more expensive ones. And I think my recommendation would be for you, and I think Neetu would agree with that, stay within your budget. Don't overspend. Don't be house poor, right?
Yes.
Thanks for watching, guys. And Hindi Rusi
See you in the next video.
Yes, and Slava Ukraini!